How is everyone doing this morning? We're taking a look right now at a S&P call and put. And basically, it's a monthly expiration. Today's date, 6/11/2012. The time is 9:12 a.m. Pacific Standard Time. One of the things that we want to define, it's 9:12 a.m. We want to show you that the 1310 put is below the floor on the S&P 500. And that we're at 13.2319 minus 2.47 handles only. That the put side was 690 close, that's 740 high, but here's the entry here, and then you could see the markup off of that 350 area. Now, we're also watching the 1310 call that had 24.20 close with a 29 high, with a low of $17 on that 1310 call. And how do we steal that wholesale bid right here and now and have the best entry than anyone else on the street? And why is that? We are the street. We are the market maker here. We will have bids down there below the market. If we can break down and test this support level within the S&P, we'll look at it. It's the same contract we traded last week. We bought, we sold it for 100% gain. Because it is. Now, that's the call. On the other hand, we take a look at that 690 close to the 550 bid on that 1310 put. And it's losing value as well from its close. And the call is being marked down from its close. Something that people haven't seen in the option market, not the professionals for that matter, that they don't know how to get that bid and ask like you. Because right now, when you're buying these lows and you're getting in at lower lows here, potentially on a 1310 call, we have bids down there at 1250. If it breaks it, we'll look at 1060. And then ultimately, we got an 880 by 920 market below here. We have different market levels, but right now, we're holding that S&P above 1320. You got to drop below 1320 to see this go down in more value toward those bids. The S&P 500 here on the put side, rather, if you start to break below it, you'll see that the bids here will get firm, and these have got a wide bid and ask spread, 1710 by $20, 1710 by 1980, 1719.60 as I speak. Look at that bid and ask change. Look at that bid and ask change, 1690 by 1980. And do you know how to trade it? And do you know how to buy that call wholesale? Back to the S&P, we just wanted to give a little bit of time so you can still see that the low volume in the S&P is holding the lower bid. But look at the markdown. Once again, we have lower orders down there. In case we want to come back down in that S&P and test a lower support level, that's going to drop us down to our what? Our wholesale bid, where we get to make money. And right now, that bid on that 1310 call is right below that $17 low. $29 high. Boy, the people that bought them calls, as there was some bought, but on the put side, you're being marked up from 350 on the low, but your spread is from 350 to 570. You're still marked down from 690 to 570 to the bid. Now, the bid is the most important one. That's what people would like to sell for. Who cares what they want to sell for? It's what this side is worth. And the Spanish banks, the Greece election, all of the stuff that we talk about and plan out is happening. And the thing about it is that bull bounce off of this last weekly bottom the previous week is not as strong as we would like to see it, because we own the calls and we own the puts and we made the wholesale markets and we do it live. Why it's really happening with the real entry. We don't sit here and tell you after the fact, because you're not going to find it in option books. You're not going to find it in anything else. It's not taught. It's a market maker school here in the option pit, and how they steal the premiums and how we take advantage of calls and puts on S&P 500 index. See your S&P 500 index right there? So anyway, MMTs, once again, it's our pleasure to bring the wholesale market prices on both the put and the call, because they both pay. Whereas a retail day trader, they're always stuck on one side. Oh, I'm only a bull or I'm only a bear. Who cares? They both get marked down. They both lose money. And you buy the bottom and you sell back up. I mean, that's just the way it is. I mean, $29 here, and we're at $16.80 bid at S&P 1321.95 handles right there. And the put side that peaked, it had a high of 740, but it had that low. It got marked down too. They both get marked down. So what? It's where the wholesale entries is based on how that S&P 500 trades. Same thing with NASDAQ 100. Yeah, the 25.50 call. That's printing down toward $1 off the low. That was 36.85 on the high. Yes, called NASDAQ 100 call option. Yes, not only that, yes, the 25.50 put that paid a smoking whopper of marking that down from $22 to $11.80, and the high was $23.90 on the opening bell gap. It was high of $23.90, and they marked it down to $11.80, right where our wholesale bids were. And now you got a $10 markup right there by trading that NASDAQ 100 25.50 put and making that entry and that glory at wholesale markets. Look at the markdown. 23, they marked it from 22 on the opening bell, open up gap. All the futures were up based on Spanish banks being bailed out. Yeah, they're just going to have to come back in 3 to 6 months and get bailed out more. So what? The market's not buying into it. We're in June period, June 11th, actually, right now at 9:31 a.m. during the lunch hour in New York. And there are great trades on both sides. And not only that, we've been watching other things that we make markets in. The 660 put, $14, printing back up toward the high. They close them at 23 and then mark them down to 14. And you buy them there because they were still in the premium in the 660 now. And when you take a look at the price line highs up at 657.55, dropping down to 643 with a $3 yield off the bottom. So once again, it's about taking advantage of both sides of the market, but understanding the index options, whether it's the S&P or whether it's the NASDAQ 100, 25.50 call, 25.50 put. We have a lot of scenarios built up, but the big money is made here. You get 30 contracts down here at $12 or $12.50, and you sell them up here at 21, you make $10. Those are $30,000 trades. Or if you're buying 5 contracts and getting $8, you're still making $4,000. It's not bad wages, let me tell you. Let me tell you. Here's the 640 call. That was $14.25, but it was $22 on the high on Priceline. We kind of throw that in there while we're trading because they pay money as they do. So we've been watching all of the right ones, including that put now. 25.50 call, NASDAQ 100, 616, 25.50 put. Wholesale buyer here, sell up here. Learn how to take the money out of the indexes and the index options and the power of a market maker wholesale on these indexes. That includes everyone. I don't care where you come from. I can get you better wholesale prices than anyone out there. And they're always wholesale.